Hey, good evening, guys. This one's a little bit different to my regular videos, right? I've probably done, I think, one public video maybe in May this year, I guess. The last one was October last year, I believe, looking at my YouTube kind of history. Um, Look, in the grand scheme of things, right, I've spent a lot of time putting our members through prop firm challenges and just kind of enjoying the peace and quiet, if I'm honest. I've had a few requests in terms of putting some other videos out there, and in the last couple of days, um, I guess I found something a little bit interesting that I thought would be worthwhile sharing with the general public, right? So ultimately, I found a couple of channels that have taken some really famous books, things like Trading in the Zone, for example, and what they've done is they've kind of turned this with the kind of assistance of AI into some kind of video, right? So there's a few little flaws, there's a few things that doesn't really translate. The voice is a little bit kind of repetitive, but ultimately they're very good tools, right? So what I'll do is I'll talk about some of these in the next couple of posts, and obviously I'll see if I can find some that I can put into the descriptions and so on, right? But anyway, the longs and shorts of it is what I've come to realize in terms of the conversations with our members on the back of these types of psychology lessons is that I genuinely feel many new traders are looking for a silver bullet, right? Now, a silver bullet ultimately means you fall into a couple of traps, and the couple of traps are you're going to have influencers and people shilling shit, right? You're going to have 10 seconds into a video, like and subscribe, sign up to this, get a free bonus for that, right? Look, ultimately, okay, anybody that's making money on that type of an affiliate link, and that's the priority of the video, right? That's in the first 30 seconds of the video. Ultimately, there's a problem, right? These guys are not trading. These guys are using their audience to ultimately fulfill, their money requirements, right? I'm going to be honest. I've got an affiliate link at the bottom, right? This affiliate link is with FTMO. I think I've made about $30 in the last 18 months, right? This isn't paying for anything, right? So in the grand scheme of things, the reason for putting the affiliate link there in the first place is I've had a lot of people say, hey, what company do you use? And it's a company that I know, company that I trust. Okay. Now, sign up directly with them, sign up through the link. I couldn't care less. The reality is, if you are asking and begging for likes and subscriptions and affiliate links and so on, you're clearly not in the market in terms of making money, right? So that's the first area. The second area is ultimately things like algos and bots, right? Now, I've been a trader 25 years, kind of know the process, I know the system. If I could find some way of turning my strategy or one of my strategies into an algo, I would absolutely love it, right? There are ways and there are means, and I'm not saying that it's physically impossible, but if you were to find an algo, I categorically know I would not be selling that algo. I'd be running to JP Morgan or someone like JP Morgan, and I would be taking out a loan on $100 million based on the account kind of proof of account, proof track record in terms of the actual trading track record. And I would be taking that $100 million and I would be trading from a beach somewhere in the middle of nowhere with no sales, no customers, nothing to stress about, right? Now, I have seen one algo working, right, and this was from a large hedge fund in London. It spent about $15 million in terms of the development of the application. They were spending something like $400,000 per month, right, in terms of refining and running this, right? Now, this particular algo, what it was doing is using some kind of arbitrage strategy, taking minuscule pips from their their broker end through to the exchange. Okay, so this was 0.3 of a pip, zero point 0.2 of a pip, zero point 0.1 of a pip every couple of seconds, right? And this was a profitable tool. Okay, now if ultimately you could find some kind of bot, you could program something and you could sell it for $250, then obviously we wouldn't have doctors, we wouldn't have lawyers, we wouldn't have accountants, we wouldn't have police officers. Ultimately they would all be professional traders, right? There would be no global debt crisis. Ultimately, I'm sure Trump would be trading this, with the US dollar, and putting America back on the right path again, right? So, with that being said, right, these are the kinds of pitfalls that ultimately you're going to find as a new trader. Then we're going to come into the brokers themselves, right? So, the brokers and the exchanges, these guys are going to preload you up with a lot of tools like RSI, right? They're going to fill up things like moving averages. And then what you're going to do is you're going to see these kind of free educational videos that will be when the 50, crosses over the 20, you buy, and when it crosses from above to below, you sell. Now, look, this is where the large institutional players, right? And this is where the psychology now starts to set in, right? These large institutional players, these guys are not against you, right? Now, obviously, a lot of people have probably already clicked off this video, right? They don't really want to hear, this kind of stuff. What they want is, where do I buy and where do I sell? And this is kind of the next part of the next topic, right? Now, before going there, the way that ultimately a broker and an exchange, as well as the institutional players, will start to understand this, is these brokers will be selling data, right? A lot of the time, these data kind of feeds will be real time, right? And the real time ultimately will give the large institutional player, not you a position in particular, right? It's what they call SKU data, SKU, right? And then ultimately, what this data will do is it will be a kind of a collective feed of the buys and the sells, right? Now you can get this in Forex sentiment. You just put in Forex sentiment into Google, right? And you'll find the same kind of thing, right? Now, obviously, at this particular point, this is only one aspect of the big picture, okay? So these institutional players, these guys are not against you personally, right? It's the herd mentality that is generated by your social media feed, by the Discord servers that you're involved with, right? Other conversations you're having, down the pub with your friends, what the postman's telling you, etc., etc., right? So, with all that being said, right, it's not against you individually, okay? That's the first thing. Now, the next thing is when you start to understand that algos, influencers, brokers, right, it's making you a job as a new trader pretty difficult to get somewhere. Yeah? Okay, so if you now understand this is a process, right, the market is working and it's always seeking liquidity. Right? The bigger players have these data feeds, normally of your data and other people's data kind of in this game, right? And the market is going to be searching for liquidity. As it goes out and it takes some form of external liquidity, ultimately taking out a new high, you're going to expect at least a pullback, if not a change in the character. And this is where, really kind of old school techniques, things like Elliott Wave and Wyckoff, this is where it kind of comes to its own, right? This isn't technical analysis, this is sentiment analysis. And this sentiment is a collective or a large group of traders that have very similar kinds of mindset. Now, the similar mindset is ultimately based on the fact that you've gone in, you've signed up with your affiliate link, you've spent $2,000 and they've given you a free $1,000 50% kind of sign up bonus. They've then preloaded your charts with moving averages. These are the kinds of questions you need to be asking yourself, right? Where's that extra money coming from? Because the affiliate themselves, they are anywhere between 25 and 75% of whatever deposit you make, right? So this is the kind of money they're getting. The money sometimes doesn't even touch the exchange. The money literally goes into the founders of the exchange's pocket, right? Bank accounts, based on the fact that they know you're about to lose your money, right? Now, let's just say that you get a little bit lucky and you start making some kind of patterns. You start getting in front. You start to kind of play the education system, and you get yourself in a position where you're doing well, right? Or you're doing something right. The psychology of the market is, like I said, not against you. The psychology of the market is the herd mentality, and that herd mentality is pretty much visible on any chart, every chart. Okay, and this is where the psychology comes in. So realistically, there isn't any silver bullet strategy. It's not about how much money you can win and how much you can make, right? The real trick when it comes to trading is managing your risk, right? Now, this isn't, again, just a simple, oh, well, 1% risk and there we go. It's understanding, right? And again, this is a conversation I've had with Paul, my business partner, obviously, a couple of times this week, is in the grand scheme of things, if you were to take a loss of, say, 1%, right, you to take another loss of 1%, you're 2% down your account, right? That's not an 80% down, crypto's done this and all of a sudden you're 80% down for 2 years before we start to come back, right? Ultimately, you've taken a 2% loss. The third trade, you've set yourself maybe a 3 or a 4-to-1 type risk reward. All of a sudden, you're back 2% up, all right? Now, one of the things that I like to do is maybe on a Monday or a Tuesday, I've made a 2 or a 3% trade and it's gone in my favor. By Thursday or Friday, I'm in a position where I'm 7, 8, 9% up on the account, as an example. And what this allows me to do is to say, okay, well, maybe on the next trade, instead of taking a 1% risk, I might be a little bit greedy. I might take a 2% risk, right? Now, if I lose, I'm back down 2%. If I gain, I've doubled up on my position, right? These are the types of techniques and the kinds of strategies that you're looking for, especially with the prop firm accounts, right? Now, if you don't know what a prop firm account is, ultimately the prop firms are, in essence, kind of demo trading. But what it allows you to do is to leverage other people's money, right? So basically, there's a couple of challenges. Normally, the first hurdle or the first benchmark is you have to go over 10%. The second hurdle is usually 3 to 5%, depending on the firm. You ultimately pay something like $100 for a $10,000 account, roughly $1,000 for a $100,000 account, right? And then ultimately you pass phase one, you pass phase two. Phase three ultimately is where you start to get them what they call a profit split, right? So again, just an idea in terms of managing risk, okay? Now, putting all these kind of pieces together, from the psychology, from the strategy, from understanding there isn't any, magic silver bullet, there isn't kind of 100% winning strategies out there. What you really need to do is to look at one, where you get your information. Right? And as I said, I think genuinely most people have probably clicked off this in the first 3 minutes, right? If that. I think ultimately the point being is if you're looking to make trading you a business, right, and you're looking to make a living out of trading, what you really need to be thinking about is how you manage both the winners and the losers, right? How your psychology will affect your performance, how your psychology will evolve over time. Right? Understand that there's no magic entry. All you're looking to do is to play statistics, right? And you're looking to get in front, you're looking to get in front. When you have a bad trade, you're 1% or 2% down on your account, and that's it. Right? You then start working through the rough times, the bad times, right? And you might get 5 or 6 trades that go against you in quick succession. But the truth of the matter is, you're going to come out the other side, right? Pretty decent when you start taking trades. They're 3, 4. I mean, you take a trade 3-to-1, 4-to-1. That's a pretty decent trade. You can be wrong 60 to 70% of the time and still be profitable. Right? That's the kind of risk management. That's the kind of psychology that is going to get you into thinking and trading like a professional. Right? So, anyway, with all that being said, in terms of the charts, in terms of the numbers, right? I actually asked, it wasn't ChatGPT, but it was something similar. I can't even remember the name of what I was using. But I asked for a pretty simplistic analogy in terms of explaining liquidity. Right? Now, I can't take credit for this. This ultimately was the AI kind of giving me the answer. And the one thing that I really liked about this is the question that I inputted was something along the lines of, can you explain to me how liquidity works as if I was a 5-year-old, right? Now, obviously, I'm trying to find ways to help, obviously, the students that we have, people like yourself who are obviously still watching this. Um, I'm trying to find ways to simplify this, right? Now, I'm not going to come out here and say, hey, you do this and there's a Lambo overnight. This isn't a get rich quick scheme. This isn't a get rich, scheme full stop, right? This is a keeping you out of trouble, right? Making you think like a professional and ultimately getting you beyond those hurdles that other educators and other people in this industry almost don't want, right? Is, you put your money into, like I said, an influencer, and as far as they're concerned, they don't care. They've got your money, right? What I want to be showing you is in forms of liquidity, right? If you can visualize a little young boy selling apples, right? Now, ultimately, he's got a basket. There's limitations on the basket size that he can carry. Okay, so this is the first thing. There's obviously limitations in terms of the quantity of apples that can fit inside that basket. Right? So that's the supply issues. Now, on the demand side of things, right, let's just assume that he starts this little venture and ultimately all his friends are in school, all the adults are in work, right? So he's left with his mother and father in the house. Right? He's not going to sell many apples. So he comes up with an idea of, let's go for a little walk down the street. And I'm going to walk to, I don't know, maybe the local church. He opens the door and there's one little old lady sitting on one of the benches in the church. Now, okay, he might sell her an apple. She's feeling sorry for him. She's feeling proud that he's willing to kind of come up and give this business venture a go. But ultimately, this is where you see only a blip in the chart. Right? Now, he starts walking down the street and he gets to a playground. There's lots of kids and lots of parents around this playground. This becomes the consolidation phase, right? This is where the transactions are made. So if I was to paint this on the chart, right, ultimately what you have is a move like this is where transactions are made, right? So there's going to be liquidity in this area, right? Which ultimately means that the supply has now taken over. Right? At this particular point, he hits the park, and the park has the demand, right? So if you can simplify the liquidity, right, the market is not an algo that is actually seeking liquidity in the sense of, some computer program going up, down, up, down, up, down. It's always going to be the bigger players seeking opportunities to sell to retail traders ultimately, or buy from retail traders depending on the direction. But what they do is they leave some pretty good clues behind, right? So again, the bigger the time frame, the bigger the opportunities, but also the bigger the clue, right? The market isn't about timing. It's more about the time that you're actually in the market, right? If you're trying to catch, a 1 minute move, you're trying to catch a 1 minute swing, the chances are it's going to be filled with heavy manipulation. You're going to see the market go in your favor, and then you're going to see the market turn dead against you, because you're only seeking 3, 4, 5 pips. Right? The bigger the clues, the more obvious the footprint, the easier it is to take, the understanding, to obtain the understanding from the market. So if you can see where the bigger players are playing, right, part of the reason and part of the education that we've given to the members is more about the mechanical process that allows you to look out for these liquidity footprints that allow you to take informed decisions based on the draw or the run on liquidity, right? As in where we anticipate liquidity to go next. Right? This works in any market, right? Any market at all. Now, if I was to say, understanding what goes on, right, is when you have these peaks, something has changed in the market, right? This was obviously a buyer's market. We get up to this level of liquidity and we fail, right? We ultimately drop and end up breaking through this structure. Sellers still in control, right? We come down here and we fail again to go lower. We start moving up, making new highs, right? This is the change of the direction. But every time we do this, we're leaving liquidity, right, behind. Same thing on the way down, right? We were leaving liquidity behind. So what we can do is we can look at the market and say, okay, where is the balancing point of the market, right? Where did buyers and sellers actually agree? Well, let's take this as an example. The price drops down, right? The price comes back, and then the price rejects from the same kind of level, right? Center of this level. Then we break up and through, okay? Then we come back to the same level to retest that level. The chances are here the market is on its way up, because where is the external liquidity? Above here, right? There's a lot more to it in terms of a strategy, but the general idea is it's relatively simple without having to overcomplicate it, having to make it difficult for yourself. Once you start to see the market in terms of what it is and who the operators are in the market, what it's going to do for you is just open your eyes. Right? It's going to completely transform how you see the market. Okay, so like I said, this one is a little bit different to what I had done, what I had been doing. It does make a bit of sense given the kind of education we've been given to the members recently, in terms of the psychology more than the strategy. The strategy, what we've done, myself and Paul, we've kind of refined a very mechanical process. We've kind of put it into almost I think it's a 5 or 6 video series, which is ultimately less than an hour long now, with a 1-page PDF kind of instruction manual. So the strategy itself is pretty straightforward. The psychology, I think, is something that maybe a lot of people tend to overlook. Um, there's also something else, I guess, on that particular point before I finish, is I think a lot of people get fooled into thinking that trading can be easy or is easy on the premise that, they're successful in the fields that they've come from. They might have been a CEO or, a founder of a company that's been successful, and they tend to think that they can carry the same success straight into trading, and it translates, right? Now, in some instances, yes, and some people get lucky, but for me, it's almost like seeing a championship, sumo wrestler try to compete for the 100-meter freestyle swimming for the Olympics, right? It's possible. Is it likely? Not really, right? So, grand scheme of things, I think, look, you need to be thinking more about the psychology, understanding that the market isn't against you, it's the influencers, it's the bots, it's the algos, and all this kind of stuff, right? Understand that there isn't any silver bullet, and all of a sudden you are in a completely different situation to 99.9% of people out there, right? So anyway, with that being said, I'm going to leave it like this for this one. I got somewhere to be this evening, so enjoy the rest of your weekend, guys, and I will see you on the next stream. If you've obviously seen all this part of the video, thanks for watching, guys, and I will see you on the next one. Hopefully, I'll put another public video together pretty soon, and maybe tie this up into a more refined package, right? This was just me kind of brain dumping this evening. So anyway, have a good one. I'll speak to you soon. Cheers all.